Hello and welcome. This is Business Incorporated on Channels Television. Thank you for joining us. I'm Chimeze Obi Iwago. On the program today, EU throws its weight behind Nigeria and Korean WTO head contenders. Ghana puts gold fund IPO on hold as state prosecutor probes deal. And South Africa told to look to Ethiopia to rescue its airline. Let's get the show started now with the markets. And major markets we track here in Africa were mixed at intraday. The NSE in Nigeria continued its bull run with the index jumping 3.58%, while South Africa's JSE index declined 0.28%. The market in Egypt closed today for a holiday, but ended Monday's session positive by 1.02%. Kenya also closed positive on Monday. And major markets in the Gulf region were mostly positive at intraday, except the Abu Dhabi index, which declined 0.11%. On the flip side, Dubai's main index rose 0.04%. Elsewhere in the region, Saudi Arabia's index advanced 0.77%, while the Qatari index added 0.60%. And stocks in Asia Pacific were higher today as the Reserve Bank of Australia kept its current policy settings on hold. Hong Kong's Hang Seng Index advanced 0.9% on the day to 23,980.65. In Japan, the Nikkei 225 rose 0.52% to close at 23,433.73. The Topix index also gained 0.52% to end its trading day at 1,645 points. South Korea's Kospi advanced to 0.34% to close at 2,365.9. The S&P ASX 200 in Australia added 0.35% on the day to 5,962 points. Market in China are closed on Tuesday for a holiday. All right, let's turn to the London markets. Britain's COVID-19 job crisis is building day by day, with cinema group Cineworld putting 5,500 staff out of work from Thursday as it shuts its screens. And faced with this surge of unemployment, Chancellor Rishi Sunak is laying down suggestions that taxes will be hiked soon, pledging to protect jobs. Critics, though, say the government still isn't providing the support needed. Let's see how all of these are playing out in London. Let's talk to Juliana. Good afternoon, Juliana. Well, Chancellor Rishi Sunak, in his interview on Sky News, insists that his overwhelming focus at the moment is trying to protect and support as many jobs as possible. Are the markets taking a cue from his statements?
Not really, no, is the short answer to that. Rishi Sunak has been speaking on Sky News as well as other British media houses this morning. And really, I suppose the headline coming out of what he was saying is defending his pretty successful Get Out to Help Out, Eat Out to Help Out scheme, which was pretty popular in August with discounts if you were dining between Monday to Wednesday. There are some suggestions that the rising COVID cases in Britain is linked to that scheme. So he's pretty much defending that. And of course, when the Chancellor speaks on the same day as the Prime Minister, the PM takes centre stage, which he did during the Conservative Party conference and the launch of the new green, lean, clean energy here in the UK. Lots of money put towards that, as well as money towards 95% mortgage. Really, it was a 10-year legacy for Boris Johnson, and lots of pundits are chewing up on what he had to say. Of course, last night we had those theatrics, didn't we, from the White House in Washington of US President Donald Trump ripping that face mask off his face. That was supposed to kind of calm investors. It hasn't. Some suggest that perhaps his early leave from Walter Reed was too early. So let's have a look at the numbers. The FTSE All-Share is up 0.01%. The FTSE 100 is down 0.14%. And the FTSE 250 is up by 0.57%. On the currencies market, the pound is down against the dollar by 0.35%, down on the euro by 0.30%, and down on the Japanese yen by 0.47% at intraday.
Meanwhile, data out there today shows Britain's construction industry has recorded its biggest jump in new business since the COVID-19 lockdown was lifted. What's the major driver?
Well, according to economists, the major driver from this positive PMI construction data is down to the boost in the housing market. We spoke about it recently. Housing has seen a whopping record. The house price, the average house price has gone above £225,000 for the first time ever. Of course, if you want to live in London, you can double your money. I think the average price for a home in London is about £450,000. But nevertheless, this has really boosted construction activity in the month of September. It's up from an August rate of 54.6. In September, it's jumped up to 56.8. Of course, that's well above that 50 indication marker between contraction and expansion. And I think really what's very important is that the construction PMI data is done much better than services and manufacturing. The survey does reveal that construction firms are still laying off staff at record rates, as we're seeing. And of course, those government schemes are kind of wind down at the end of this month, but they are still showing lots of activity and lots of enthusiasm. So good data, but not enough to push up the FTSE at intraday.
And of course, the UK's biggest fund manager has warned FTSE 100 companies with all white boards that it will vote against those that fail to diversify their leadership teams by 2022. What is Legal and General Investment Management seeking to achieve with this time?
Well, what they're seeking to achieve is diversity and inclusion in their boardrooms and with the people that they work with. It's a pretty popular trend that we're seeing in big corporate companies. These Black Lives Matter protests that have started off in America and have gone across the world have really shaken up some investors. Names have been changed on buildings that are linked to slave owners or slave drivers. And now Legal and General, which manage the assets of £1.2 trillion worth of pensions as well as private clients, they've hopped on the trend, and they're saying in a letter they wrote to FTSE 100 companies as well as S&P 500 companies, saying that if you do not make your boards more inclusive, then we will no longer continue to work with you. I think it's pretty interesting. I'll read some of what they released in the Times. L&G said the horrifying killing of George Floyd and so many others has led many institutional investors to think much more seriously about structural racism and inequality. Our expectation is that companies set ambitions related to the ethnic composition of their organisation throughout their workforce, especially at the top of the table. The report also mentions McKinsey, and McKinsey actually have some statistics. So this isn't just about racial equality, it's about meritocracy, because they did say that boards that are more racially diverse make better decisions and produce greater financial returns. So for those who will be frowning their noses saying that L&G are just hopping on a BLM trend, they're actually not. They have looked at evidence that does suggest and show that companies that have more diversity at the top fare better. So interesting report. We're likely to see whether the 45% of the FTSE 100 companies that have all white boards will change their positions this time next year.
We'll see how that goes. Thank you, Juliana. All right, we'll move on to the European markets. The stocks edged lower this morning, with global markets reacting to President Donald Trump's return to the White House on Monday to continue his coronavirus treatment. Well, let's hear more from Chelsea. Hello, Chelsea. Good afternoon. Well, markets were upbeat about U.S. President Donald Trump leaving the hospital, but his doctors say he's not out of the woods yet. Is this optimism premature?
It does look a little premature. It's obviously a good sign that the president has been allowed to leave the hospital, but there's still a lot of questions about what kind of recovery he's looking at, whether there will be longer-term side effects of that. And of course, for investors and for economists, for businesses, this is something they are really considering now, how will his illness impact the political arena, especially now that we're a month away from the U.S. election. One of the reasons we're also seeing stocks recovering a bit today, as you can see behind me, the DAX has been climbing quite a bit, is that the U.S. Does seem to be getting closer to a stimulus deal. The president's illness seems to have galvanized both sides to some degree to really come together on this package that they've been negotiating basically since the summer. We haven't really gotten many details about where they're coming from on some of these difficult issues that have really hung up the negotiations. But we've heard really from all sides, from the president himself, from the House Speaker, from others, that they are more and more optimistic that they will be able to strike a deal. So there's really a lot driving markets today. But for now, investors are really focusing on the prospects for stimulus and for a little bit less political chaos in the United States.
And government data showed German factory orders rose 4.5% in August, the fourth month of growth. Was the increase expected?
There was an expected increase. Economists were looking for an increase around 3%, but this really blew it out of the water. Factory orders and in general, the German industrial sector has been doing very well over the past several months. Like all parts of the economy, it was impacted by coronavirus. Many factories, including some of the big names like Volkswagen, had to shut their factories for at least a couple of weeks during the height of the pandemic in April and May. But since then, we have seen really an acceleration on the industrial side of the German economy, and in particular, the car sector is seeing tremendous growth right now. They've actually seen factory orders recover to where they were before the pandemic. So in August, orders for the automobile sector were actually higher than they were in February, which is a pretty surprising development. But we're also seeing the German industrial sector really benefit, for example, from the exports situation. It's really seeing demand from both inside the EU and also from China, which has seen a really strong recovery since it began easing lockdown measures earlier this year. So the industrial sector is very much driving growth in Germany right now, much more so than the services sector, which has been hit by the rising number of infections and the increasing concern over new restrictions.
At the same time, Germany reported almost 2,700 new infections today, the highest level since April. What is the government doing to contain the widening outbreak?
So what we've heard from the government is that they really do at all costs want to avoid a second lockdown. The economy minister here yesterday, Peter Altmaier, did say that if it's up to him, he would not allow a second shutdown of for example, the factory sector. So they really want to avoid a nationwide lockdown, but we are seeing more and more restrictions and more decisions on restrictions being taken by the 16 federal states in Germany. So one of the things we've seen over the past couple of days is that two states in Germany have put Berlin and 4 Berlin neighborhoods on the high-risk list, the list of high-risk areas. So that means that people who live in those neighborhoods in Berlin will have to quarantine, basically, if they come to those states in Germany. This comes ahead of a holiday period, so that could really impact things like travel. But as we do see more and more hotspots breaking out in Germany, more states are having to consider things like quarantine restrictions on other parts of Germany, as well as changes to the easing of restrictions, for example, on restaurants and bars. So we haven't seen any major nationwide restrictions put in place recently, but we definitely are seeing new actions being taken on a local level.
All right, Chelsea, thank you for updating us on that. See you tomorrow. All right, we'll take a break, and when we come back, we have all the stories on the blog, as well as our commodities market update. To stay with us. The European Union government have endorsed Dr. Ngozi Okonjo-Iweala, Nigeria's former finance minister, and Yoo Young-hee, South Korea's trade chief, in their bids to become WTO Director General as the race enters its final month. Hungary swung behind the planned recommendation after being the only EU country to withhold support at a lower-level meeting last Friday of officials representing the 27-nation bloc. 5 candidates are still in the running to lead the WTO. It plans to announce 2 finalists after October 6 and name a winner by November 7. Brazilian Roberto Azevedo stepped down from the job at the end of August, a year before his term ended. The Geneva-based trade body faces headwinds from the coronavirus pandemic, the US-China trade battle, a hobbled arbitration system, and the lack of tools to tackle growing challenges such as industrial subsidies. And Ghana has suspended plans to raise $500 million in an initial public offering of a gold royalty fund after the state prosecutor began an investigation into the sale. Africa's biggest gold producer won't proceed with the IPO until the Office of the Special Prosecutor has concluded its probe. The OSP announced on September 30 that it's assessing the risk of corruption in the royalty fund offering after civil society and opposition groups criticized the deal for a lack of transparency. The ministry will collaborate with the prosecutor's office and await the results of the assessment before proceeding with the offering. The share sale had been scheduled to start in September to take advantage of record gold prices. The fund will be structured to pay dividends from the government's income from gold operations and be listed in London and on the domestic stock exchange. Ghana plans to use the proceeds from the offering to invest in other producers, develop a refinery, and invest in jewelry tourism. And South Africa has been asked to act to preserve its insolvent national airline and seek to partner the carrier with Ethiopian Airlines Group. This is contained in a report prepared by Africa Aviation Services Limited and presented to a group of African National Congress lawmakers on Monday. South Africa Airways went into arbitration in December and now needs more than 10 billion rand to restart. The airline hasn't made a profit since 2011 and has been surviving on government bailouts. Ethiopian Airlines shares a similar Pan-African vision to SAA and is Africa's strongest carrier. Ethiopian Airlines is willing to provide planes, pilots and maintenance services to SAA, but doesn't want to assist with paying off its debts and meeting the costs of cutting its workforce. All right, let's look at the domestic commodities space. The focus, of course, is on clean energy as the surge of interest in climate change and environmental control is gaining pace. Companies that produce clean energy are seeing their stocks shatter records. Now, solar panels and other inputs used by alternative energy producers are falling in price due to better technology and increasing manufacturing volumes, which has brought down their average costs. All right, let's talk about this. And I have joining me now to look at this, Mayowa Ige, one of the research analysts at Financial Derivatives Company. Good afternoon, Mayowa. Thank you for joining us.
Good afternoon. Thank you for having me.
There has been increased interest in climate change and environmental control, which has seen environment-friendly companies do better than oil companies. If this trend continues, what will be the impact on the obsolescence of oil and the growing irrelevance of OPEC and oil companies?
First, this trend is definitely going to continue because when you look at it, for instance, in Lagos and most parts of Nigeria today, we had heavy rainfalls, and this is October. This isn't a phenomenon that is usual, should we say? And so this is the result of global warming. Now we're seeing it everywhere globally. You have the wildfires in California, and this has made different countries come together to take initiatives to combat climate change. And one of these initiatives is the Paris Accord in 2015. So all of this shows a trend in the move to renewable energy. And with this, you have more, which shows that this space really is going to be profitable going forward. And this is why you have more people, more companies, countries going into this. So with this trend, yes, it's going to continue. It's not going to be a phenomenon, something that will stop anytime soon. So the impact on oil will definitely affect oil in the sense that the demand for oil will drop because more people will be transitioning to other sources of energy. And oil companies are already announcing that they're going to make a transition and embrace producing clean energy. Shell, for instance, has already announced that, and we expect that going forward, more companies would actually announce that they would also move from producing crude oil to renewable energy in the near future.
And the price of solar panels, has fallen in recent times. And if this continues, it will mean that the price of solar energy will be lower than other sources. What is the impact of this on the Nigerian consumer and, of course, the demand for oil and the Nigerian economy?
Currently, average Nigerian consumers as individuals, as businesses, use generators as an alternative source of energy. And currently, they spend about $14 billion on generators and fuel yearly. And when you also look at the recent deregulation of petrol or the petrol industry, you see that the prices of petrol going forward would increase, which will mean that the amount of money people spend on generators and fuel would also increase going forward. So with this, the decline in solar prices is definitely a welcome thing. With this, more Nigerians would definitely transition to buying solar energy, as it will be cheaper than running generator, running fuel. And then solar energy is more efficient than using generators and even our unstable power supply currently. And with higher efficiency, there will be more productivity. More productivity means that there will be a boost in our economy. People will be producing more. And when people are producing more, we'll have more to even export, and that's an opportunity for us to earn foreign exchange. And so we will definitely see a boost in our economy with the drop in price of solar as more Nigerians embrace the use of solar panels because they can now afford it.
Now, Nigeria has got both crude oil and sunshine. The country has about 36,890 million barrels of proven crude oil reserves, and it is predicted that it will fall by 6 billion barrels this year. Now, in what ways can the government shift focus from crude oil to solar energy as a source of power generation in the country, given the current poor state of Nigeria's power sector?
So currently, the government actually has two policies that address renewable energy sources as an alternative source of energy in the country. They have the National Energy Policy of 2003 and the National Renewable Energy and Energy Efficiency Policy of 2015. These policies are actually adequate in addressing the renewable energy space in Nigeria. However, it's been poorly implemented. That's where the major problem lies. The commissions, the institutions responsible for implementing these policies are majorly controlled by the Minister of Power. And then you know that the minister changes every 4 years. So the political instability is affecting how effectively these policies are being implemented. So one thing the federal government can do is to structure the commission responsible for implementing this policy in a way that it's not affected by the changes in the political environment. Other things the federal government can actually also do is to give incentives to local and renewable energy producers in the country in terms of import duty waivers, tax relief. It will go a long way in reducing their cost and also the price, so more people can afford to buy solar panels. And also the government can also develop skills acquisition programs for teaching people how to handle solar panels. This way you are increasing the workforce capacity for renewable energy. And so the maintenance of renewable energy sources, solar panels, will reduce, and more people will be more open to embracing this change as they know that they can afford to maintain it long term.
All right, thanks, Mayo, for sharing your thoughts there. Thank you. Mayowa Ige is one of the research analysts with Financial Derivatives Company. Well, on that note, we draw the curtain on today's edition of the program. Thank you for watching. I'm Chimize Obi Iwagu.